Yeah, look, first of all, you're right. Our results are lower than the first half last year, but they're actually higher than the second half of last year. We have had a fairly good first half. It started on a big expectation of a strong growth in China as they were coming out of COVID. There has been a little bit less growth than expected, perhaps, but so far the Chinese economy grew more than 6% year on year in the second quarter, so it is growing, and we have good demand for our products. Of course, there's uncertainty going forward, but I remain cautiously optimistic.
And how would you define cautiously optimistic in this environment? Because everybody's talking about average growth of 5% for the Chinese economy. What would it take for the world's largest consumer of commodities to really benefit businesses such as yours, to come back and show recovery?
Well, a couple of things. First of all, it's not just the Chinese economy. The US economy and the European economy have probably performed slightly better than we would have expected 6 months ago. And then the Chinese economy is growing. And there's talks, of course, as well about stimulating the economy. And China has a very good track record of being able to manage the growth as they plan. So that's what gives me comfort around the outlook.
But what would that mean in terms of your own assessment of the recovery in China? Can they go beyond 5%, you think, in a secular recovery mode from here?
Look, I don't think too much like that. And it's also because Rio Tinto is a long-term company. We can live with the cycles. If it's a bit less or a bit more, that's not so important. What is important is that there is long-term demand for our products, for iron ore, which is our biggest, and particularly for our next biggest products like aluminium and copper, that what we see now is a much stronger demand for our products following addressing climate change. So a number of building a new energy system requires so much more aluminium and copper and battery materials. So we are well exposed for the long term.
Fair enough. Let's talk about your guidance then, Jakob. You are keeping your conviction with guiding for a higher output, higher iron ore output for the foreseeable future. In fact, you have increased the guidance to the higher end of the range as analysts were watching out for your outlook and your view on the overall shipments, the overall production of iron ore. I want to understand what's driving this optimism.
No, look, specifically on our guidance, it's short-term guidance for the year, and it's more internal factors. The fact is that our iron ore business, primarily in Western Australia, has performed well over the last couple of years and increasingly well. We have now had production growth the last 5 quarters. And we have, for the first time in 5 years, upgraded our guidance mid-year. And it basically just shows that we have got really good production stability in Western Australia. But I do think what we are talking about as well longer term is the growth outlooks, where we have plans in place to significantly grow our copper business, for example, and build a battery materials business.